Hello, hi everyone. Thanks for coming in. Thanks for tuning in. All right, we will be starting soon. So I just invited everyone. So good afternoon, everyone. So thanks for coming into our Ask UI series. So let's wait for about 5 more minutes for more people to actually jump in before we get started. Hi, Casey. Are you guys able to hear me? Right. So, yep, it's been some time since we are using the Zoom. So if you can hear me, can you please type in the chat group 555. If you can hear and see me, can you just type in 555? Okay, thanks, Albert. Right. So I believe that you should be able to see me and you should be able to hear me as well. So if you're not able to hear me, probably it's your phone setting. You might need to enable the sound. Fantastic. Okay. Hear loud and clear and image is clear. Fantastic. All right. So once again, very good afternoon to all of you. So we will be starting in about 5 minutes time. We will just let more people actually join us. And of course, we will be also live as well at the same time on our Facebook group, Facebook page. So if let's say at any point of time, if you miss anything, you want to actually watch back again, you can go to our Facebook page and you will be able to see the full review, the full replay as well. All right, so I will be muting some of you guys. So at any point of time, if you want to, if you have anything to say, feel free to unmute yourself and then you can actually just go and share what you want to share. If not, some of you guys probably because of the background noise, I might have to mute you guys. Okay, yeah, I've muted most of you. Yeah, but anyway, this particular series, I just want to keep it as casual as possible. So at any point of time, if you want to jump in and share something, okay, feel free to actually unmute yourself and then just share what you wanted to share. Or later on, there will also be some timing for additional questions. So I have already prepared some questions which you guys have actually put into the Padlet. So I will be answering those questions first. And later on at the last part, I will have time for some additional questions. So during that portion, okay, feel free to also share with us what are some of the questions that you actually want to ask as well. Right now we have 22 participants on the Zoom over here. So let me just admit everybody in first. And of course, let me just check if there is anybody who is asking any question on Facebook Live as well, because we are also live on Facebook. Okay, yeah, we have 2 person on Facebook, so which is okay, fine. Okay, we'll be starting in about 2 minutes time. Okay, after 2:05, we will actually get started. So once again, very good afternoon to all of you. I hope you guys are doing well, especially during this COVID period. And of course, election is coming. A lot of very exciting news on our social media from various parties. So again, over here, we don't want to share too much about our own political view, but I think, yeah, it's definitely interesting to see, the views from both sides as well. And of course, next Friday is a public holiday. So, is it next Friday? Yeah, next Friday. Next Friday is a public holiday. Yeah, so additional good news for all of us. Okay, another 1 more minute and we will get started. So again, if you have any questions, okay, you can also put it into the chat group over here. So later on, at the end of the session, I will be also taking up some additional questions. Okay, but again, for this particular series, we will keep it to 1 hour maximum. So if there's not much question, we will actually probably end early. But today I actually prepared some questions that you guys have actually asked. So hopefully we will be able to manage our time and to be able to do everything within 1 hour. Okay, let me just mute some of you guys. Okay, good. All right, okay, and let's get started. I will be recording this. Okay, so good afternoon, everyone. So once again, a very warm welcome to this series on Ask UI, whereby we actually take up some questions from you guys and we basically will answer them one by one. So thanks for all your response. Basically, all the questions that I will be sharing is actually contributed by all of you. So really grateful that you guys actually have questions, because I think it is very important that for us to actually understand what are some of the things that you guys are actually looking out for, and so what are some of the things that you guys are probably not too sure about. So what I'm going to do right now is I'm actually going to share my screen. Okay, and if you are able to actually see my PowerPoint slide, can you just type in into the chat group, ask UI, ask UI. Okay, once again, as usual, we will try to keep it as interactive as possible. So, you know, this is going to be like a mini workshop. So please help me by contributing, by exercising your finger and typing in as fast as you can. All right, so far I've seen like how many response? Four response. Okay, I think we should. I'm pretty sure that you guys can do definitely a lot better because we have 22 of you here. So can we have more people actually typing in ask UI? Okay, so it will be in the chat group. So again, the chat group should be very, very active. Okay, so thanks a lot for the for those of you who actually type in, and again for those of you who actually join in today. So very importantly is that you know, we have our YouTube channel whereby we will actually put all the recording as well as all the replay on our YouTube. And not only that, okay, I think nowadays we'll be using more of our Ultimate Investing Facebook page as well. So right now it's also live on the Facebook page. So for those of you who actually miss it, or you need to go off any time you want to watch the replay, it will be on the Ultimate Investing Facebook page as well. So we would appreciate if you can actually help us by liking the video, and of course to help to share so that more of your friends can also benefit from it. And of course, for this last part, which is something new, right? If let's say you guys actually want the presentation for today, all you need to do, very simple, just go to the comment, type in the word claim, CLAIM. So after you have typed in, what we will do is we would actually send you a PDF copy of the slides that we actually presented today. All right, so that is very, very simple. So moving forward for most of our buy or buy series is the same thing. If you want the PowerPoint slides, very simple, just need to type in the word claim and then we will actually send it to you. Right, and of course, before I continue, once again, this is going to be a disclaimer that whatever I share is actually based on my personal view. So at any point of time, investment do carry certain risks. So please do your own due diligence before you actually jump in and for any kinds of investment. So now I'm going to dive straight into the first questions that is actually posted on the Padlet. So here it goes. SG stock have been getting less action with more delisting and less share volume. However, traditionally, some SG stocks do give consistently good dividends of 3% and above. So can UI sift out the fundamentally strong SG stock with good enough trading volume and good enough dividends of at least 3%? So to summarize, basically, we just focus on the green color word. What we are going to do today is I'm going to show you how you can sift out the fundamentally strong SG stock with good enough dividend of at least 3%. So how can you actually do that? Really, really simple. Okay, I'm sure you all have heard of this company, SGX. So basically, if you buy any shares, all the shares in Singapore are all going through the Singapore Stock Exchange. So what you can do is you can actually go to the SGX website, which is sgx.com. And after you have clicked over there, what you need to do is click on the securities at the top left-hand corner. After your mouse click over securities, there will be a drop-down list. And in the drop-down list, under prices and screener, okay, you can click on this thing called stock screener. So later on, you can actually go and do it on your own as well. So after you have clicked in the stock screener, what happens is that you will come to this particular page with this particular information. So what we want to do over here is we want to put in the criteria, okay, that defines a good company. Okay, that defines a good company. So I have actually put in some of the things that I personally will be looking at. So probably if you want, you can actually take a photo, or if not, you can actually go to the website later on and just type in claim so that you can actually receive the PDF and you will be able to see this file as well. But let me just touch on some of the important point over here. So very importantly over here, we are looking at this thing called net profit. And as you can see, I put a minimum of 0, which means that I want to make sure that this company fundamentally at least must be making money. All right. So it might seem a little bit stupid, and I mean, most companies should be making money, isn't it? But you will be surprised to find that there are many companies that are relatively known, but yet they are actually losing money. So of course, if we have time, I think one of the few examples, good examples, is, for example, HiFlux. Okay, so many people are putting money into HiFlux. So for somebody who is new, they probably thought that HiFlux is making a lot of money. But later on, if we have time, we will check out HiFlux fundamental, and that is where you will see that they have been losing money for many, many years. Right, so the first thing, fundamentally, look for companies that is making profit. The secondly is we want to know how efficient the management is. Remember, we look at ROE above 15. So that is where you want to shift the bar to be minimum 15. So that's the second thing that I will be looking at. And of course, for the third one is this thing called revenue change. So again, same thing, I'm a little bit conservative over here. What I want to do is I just want to make sure that this company is still growing. Okay, and that is where I put a minimum of 0. That means it has to be positive. So some of you might be a little bit more aggressive. You want to look for companies that is growing at least 10%. All you can do is just shift it up a little bit more until the minimum is 10%. And of course, for the last one, based on the questions, how can we find good company that is giving a dividend of at least 3%? All right, so for me, I'm actually a little bit more strict. So I'm actually, or rather, I wouldn't say strict, I'm a little bit more kiasu. So I'm always looking at dividend yield of minimum 5%. All right, minimum of 5%. And that is where I shifted it so that the minimum is at least 5%. So what this screener do is they basically screen out all the companies out of the, as you can see, 723 stock in the Singapore Stock Exchange. They find companies that fulfill all these 4 criteria. Net profit that is positive, ROE above 15%, positive revenue change, as well as a dividend yield of more than 5%. So with that, straight away, they actually found us 10 stocks. All right. And so which are the 10 stocks that we are looking at is basically these 10. So you have Asian Healthcare, Centurion, HC Surgical, iRead, Han Hong, Propnex, Silver Lake, Sing Holdings, StockMed, and of course the last one is Union Gas. So here, having said that, it doesn't mean that all these 10 companies immediately you should go and buy. Okay, what we would actually advise you is that this is a screener that helps you to screen out these 10 companies. So what you should do is also to put these 10 companies into the watch list that we have actually shared with you in the Telegram itself. Okay, run through all the checklists that we have actually, indicated, and then you can do the double confirm on your own. So it is always good to double check again. Okay, it is always good to double check again. Okay, because over here we didn't check at the debt level and things like that. So what you can do is once you have these 10 companies, plug it into the spreadsheet that we have given you in the Telegram, and then run through all the few checklists that we have that is already inside the spreadsheet. And of course, things to take note, you can see that on the, let's say, over here, we have yield, right? So some of this company, you can see they're giving a yield of, let's say, 7%, 9%. Okay, most of them are above 5%, which I think is pretty decent. Yeah, so immediately you can see that all this company has more than 5% yield. Okay, the net profit are all positive. The ROE are all above 15%, and the revenue growth is all positive. So this will save us a lot of time. So this is the first place that I would like to introduce to you, which is sgx.com. Okay, coming to the second question. Okay, second question is dollar cost averaging still better than lump sum investing in the long term, given all the transactional costs incurred every single month, right? So I think the main questions over here is, of course, to compare dollar cost versus lump sum, and in terms of the commission that you're going to pay if you were to do it on a monthly basis. So let me share with everybody first what is dollar cost averaging, because for some of you who are new, you might not understand this particular term. So dollar cost averaging basically means that you set aside a fixed amount of money and you invest regularly on a monthly basis. So for example, you put in $200 every month, and basically every month you just invest $200, $200, $200, $200 for a period of time. That is what we call dollar cost averaging. And that means you don't care whether the market is going up, going down, you just keep doing it. It's just like your regular saving plan. And of course, for lump sum investing basically means that you see this company that is good, you put in $2,000, $5,000 one shot, and then you leave it there. So definitely, if you go for a regular one, that is definitely going to incur more commission, more transactional costs. But which one is better? Let me explain it to you guys. So I think over here, what we want to do is very simple. Okay, for me personally, I try to aim to keep my commission at less than 1%. Okay, less than 1%. So anything that's above 1% to me, probably not that advisable. Anything below 1%, still acceptable for me lah. Okay, some of you might feel that 1% is still quite high, but for me, why I feel that I'm okay to go at less than 1% is because I feel that the experience is very, very important. Later, I'll also explain a little bit on my view, right? So for example, this is one of the rates from one of the broker in Singapore. So if you were to invest in the Singapore, you have to go through one of the broker. So I don't want to state which company is it, but basically you can see that the charges are 0.275% for contract value up to 50,000. So I'm going to use that as the benchmark. So that means the rate is going to be 0.275%. Very importantly, at the bottom, okay, for us to take note is that there is a minimum commission of $25. So what does it mean by this? Let me give you a scenario. So for example, you invest $2,000 into ABC stocks. So how do you calculate the commission? The commission is calculated by 2,000 multiplied by 0.275%. And that will give you a commission of $5.50. But what happened is that because there is a minimum commission of $25, so if your commission is less than 25, then you have to pay the minimum commission, which is $25. So in this case, what is the percentage in terms of commission that you are actually going to pay? Okay, that is why you take $25 divided by the amount that you are putting in, and you will get 1.25%. So in this particular scenario, we can see that it is above my benchmark, okay, because I want to keep it at less than 1%. So how can you make it less than 1%? Basically, you need to put in a little bit more. That means instead of investing 2,000 in one stock, probably you can go about 2,500, okay, so that you can actually keep it at 1% or less than 1%. So I would advise at least 2,005, okay, for you to go into individual stocks. So this is the first thing. Then of course, I hear people investing 4,000 or more. Some people invest like $10,000 simply because they mentioned that they want to maximize the commission. Because they say that, yeah, if I put in more amount, the commission is going to be more efficient. So I'm not going to be charged that much. So for example, somebody putting $4,000 per trade. So you can calculate the commission, same thing, 4,000 multiplied by 0.275%, and that will be $11. So even with this amount, you realize that you will still have to pay a minimum commission of $25. So based on this, your commission yield, instead of 1.25, it is definitely lower in terms of percentage. It is 0.6%. Right. So definitely this one would fulfill my criteria. But again, if you look at the amount, it's going to be a lot higher. Okay, the last one was 2,000. This is like double, $4,000. So I just want to share also this point is that diversification is very, very important, especially if you are new. So for example, you just started investing, you have a capital of $5,000. So some people will say that, oh, you need to maximize your commission. So you need to put 5,000 into one stock. Don't buy like $1,000. It doesn't make sense. So this is my suggestion. If you have $10,000, what I would do is I would actually split them up into 2,500 each. And I would actually go for at least 4 different entry. That means different stocks. Can be different stocks or different entry. Yeah, but basically I'll go in 4 times maximum. Instead of what? Instead of 1 or 2 entry at $5,000 each. So I would rather go for more different stocks rather than putting more money in one single stocks. All right. So if you are following me so far, can you just type in 777? If you are still following me so far, can you type in 777? Just to make sure that you are still with me. Okay, fantastic. Very, very good. I see most of you actually replied. Yes, so this is what I will do. I actually don't mind paying a little bit more commission in terms of percentage, okay, for experience. So, you know, because you know that, for example, if let's say I have $10,000 and I just buy into, let's say, one company, let's say I buy into SIA, and you know the SIA suddenly just dropped. So psychologically, you know, it's very difficult for you to actually cut loss, or, you know, it's going to be very, very painful if that particular stock that you enter actually go against you. You know, but of course, if you split into multiple companies, so maybe 3 of them are doing well, 1 of them not doing that well, but overall you will still be doing pretty okay. So especially, like I say, if you're new, commission is to me secondary. Okay, I would advise to just execute as many action as possible. But of course, don't go in like $1,000 or less. Probably it's not going to be that efficient. So of course, another way, if you would like to do dollar cost averaging, is you can actually check out this thing called the regular share saving plan. So this information that I actually extracted from Seedly, they basically talk about different companies like DBS, FSM, which is Fund Supermart, as well OCBC and Philips Security. So different companies have different branding on this thing called the regular share saving plan. And of course, you can look at this comparison that is actually created. The cheapest commission is so far by Fund Supermart. All right, and how much is the commission? You can see it's only $1. So which means that you can actually do this and invest $100 every single month, and your commission $1, which means that your commission is still 1%. But can you see now you only need to invest $100, $100, $100, $100 every month. And I would say that the commission is pretty decent. Okay, it's pretty decent. So if you are, let's say, totally new to investing, if you are students or you just graduated, you have limited capital, I would definitely advise, okay, for you to actually go into a plan like this, especially if you would like to dollar cost. Like that means you don't want to time the market, you just want to invest regularly for a long period of time. So this would actually be the preferred choice. So I actually zoom in into the FSM one because they actually offered the lowest rate. So this is obtained from the website. As you can see what they mentioned, low cost, 0% for unit trust and $1 for ETFs, and no initial amount. So yeah, you can start with, I think, as little as $50. So $50, of course, $1 will be 2%. So usually try to go for at least like $100 a month. And of course, you don't have to worry about the minimum lot size, no lock-in period, and it's pretty hassle-free. So overall, I would actually feel that this is quite good for people who are totally new. And again, I think for some of the other series that I mentioned is I actually love the ETF for the Singapore STI. Okay, there's a few ETF that is for the Singapore STI. So you don't have to pick which company you like. For example, you don't know whether DBS good or OCBC good or UOB good or Singtel is good. So what you buy is you buy the whole basket that represent the 30 blue chip company in Singapore. So as long as overall most of the stocks goes up, basically you will be able to benefit from it as well. So you can actually do that by investing in the ETF. And of course, if you want people to actually invest for you, you want the fund manager to pick certain funds for you, then you can also look into unit trust as well. So that is for the first and the second question. All right, I hope so far it has been pretty clear. And of course, coming to the third question, okay, somebody asked to analyze Beyond Meat. All right, so what I did is I actually did a very, very quick analysis onto this company, Beyond Meat. So very quickly, let me just dive in. What does Beyond Meat do? As you can see, they are a provider of plant-based meat. That means they create meat that looks like meat, but it's actually created from plant. All right. So if you look at the right-hand side, you know, they have like, for example, Beyond Beef. Okay, again, it's not beef, it is all made with plant extract. All right, and of course at the bottom you have so-called like the burger. You know, it really looks like a normal, you know, meat burger, but of course again it is actually plant-based. But having said that, okay, although it is plant-based, but from what I know is that a lot of vegetarian actually still are not, they still stay away from it lah. All right, but of course, for people who, let's say, they cannot eat beef, then I would say that this is something that they can look into lah. Alternatively, for those of you who don't actually eat beef, you can actually eat Beyond Beef. Right? So this is of course a US company, and of course right now a lot of their products is actually meant for restaurants. So for example, you can see at the bottom they are in Carl's Jr., Subway, Dunkin' Donuts, A&W, TGIF, and of course many other. McDonald's is not confirmed yet; it's still in the test market. And of course, the last one is the boneless fried chicken. That is also, I think, in the testing phase. So very interesting, something new. So let's take a look at their competitor. Who are their competitors? Oh, okay. Thanks, Edmund. Starbucks also one of their customer. So Impossible Burger Food and Beyond Meat. Okay, they are competitors. So one of the largest competitor is of course Impossible Food. So the thing over here is that Impossible Food is not publicly traded, but of course they are still a competitor lah when it comes to this particular market share. So let's look at the main difference between Impossible Food and Beyond Meat. What is one of the key difference? So I mean, based on their research, based on their survey, they actually do a tasting between all these different brands, which one actually tastes nicer. So I would say that the number one choice is still Impossible Food. Okay, and the reason why Impossible Food has a better tasting product is because they contain this molecule called heme. I don't know, like Heme, heme. So in order for them to actually get this particular molecule called heme or heme, they actually genetically modified the soybean in order to generate this. So which means that it's actually a genetically modified food for Impossible Food. But for Beyond Meat, because they do not want to genetically modify it, and that is why for their plant-based product, they do not actually have this particular molecule called heme. And that is why the use of this molecule or heme is basically to enhance, so that when you actually eat it, it really feels like you are eating meat. Okay, I mean in terms of the texture, in terms of the feeling. So I would say it's pretty important because a lot of people want to not eat meat, but they still want to feel like they are eating meat. So that is why I would say the Impossible Food, in terms of the tasting wise, the whole texture will probably be better lah. And so far, I think they are number one in terms of the taste. But Beyond Meat, because they are a listed company, so they definitely have more funding. And that is why in terms of the skill, in terms of how they can manufacture, they are definitely able to manufacture at a much larger scale as compared to Impossible Food. And one of the key reasons why McDonald's is doing testing with Beyond Meat is because McDonald's actually approached Impossible Food first. But Impossible Food actually mentioned that they will not be able to cater to the kind of demand from McDonald's. And that is why, McDonald's, they kind of drop out from it. And subsequently, McDonald's went to look for Beyond Meat because they would have the manufacturing capacity. So once again, this is something that is very new. It's a very new industry, a new niche. So let's look at the fundamental. So again, it is listed only in 2016. As such, you can see that before 2016, there's no data. Right now, what are the things that we want to focus on? Number one is revenue. Are they growing? More and more people buying their product. Definitely, you can see that based on revenue, yes, more people are buying their product. But again, we want to look at the profit. Again, are they making money or not? So that is where you look at the earnings per share. You can see that although the earnings per share are reducing, but at the current moment, the company is still losing money. Okay, they are still losing money in this particular sense. So coming to the third one, which is the cash flow, are they able to generate positive cash flow? Basically means that end of the day, is that positive money going into their bank account? That is what we want to look at. So of course, the best thing is positive and supposed to be growing. And in the case, we can see that their free cash flow is actually negative and it's actually increasingly negative. I think partly it's because they are reinvesting a lot for their maybe their R&D and also for their manufacturing, and that is why a lot of money is being reinvested at the current moment. So of course, with that, it simply shows that in terms of cash flow might not be really that healthy. So just by looking at this, okay, personally, it depends on individual, but personally, I will actually avoid investing in this kind of company first because they are still relatively new. There's still a lot of uncertainty, and of course, they're still not making profit. So what I did is I actually have a summary, okay, based on the 3 good point as well as the 3 bad point. So starting with the good point, over here they say that plant-based meat should continue to grow rapidly as the product gain additional share from the ground meat category. So more people will be converting into this particular plant-based meat. And of course, the second one is that Beyond Meat is actually one of the earlier mover. So there are actually more and more competitor other than Impossible Food. There's a lot of other brands that is jumping in, but Beyond Meat and Impossible is one of the earliest ones. So they would have some first mover advantage. And of course, for the last one is that Beyond Meat is the highest possible chance to secure a deal with McDonald's. All right. So hopefully, if this actually goes through, I believe that it would actually contribute a large jump in the revenue, okay, in this particular company. And of course, for the not so good, I think it is the first one is of course competition. There's a lot of competitor that's actually jumping into this particular market. The second one is that with COVID-19, I think a lot of business are affected, and that includes, Beyond Meat as well. And of course, for the last one is that people actually want, yes, people are moving away from meat, but at the same time, people are moving towards natural product. So will people be able to move towards a plant-based or rather like a lab grown meat? That is something that is still require further proven to prove that people actually don't mind going into plant-based meat instead of a natural product. Right. So I mean, you actually make your own choice whether is this a company that you want to invest in, maybe for the long term, or I would say personally, in terms of long term, I think there is a chance because again, it is something that is growing and it's a trend. If you're looking at short term, then probably you want to add in a little bit of technical analysis to help you when it comes to the timing. Right. And of course, coming on to the fourth question, and this is going to be the last question as well. So based on the Pareto principle, 80% of the effect comes from 20% of the most powerful stocks or something similar. Is there a method where I can still go in and buy stocks even when the stocks are going higher and higher? All right, I think it makes sense. It means that, for example, if you look at this company Zoom, okay, I did mention in my buy or buy series that although the company, I love it, is in the right industry, but competition is very, very strong. But despite that, you look at the share price has been going higher and higher and higher. So should we actually still jump in because it could potentially go even higher? So I think this is the key concept over here. So what I want to do over here right now, very, very simple. Okay, I will need everybody to participate with me. So we are going to play this thing called a stock market game. So later on, I'm going to show you a chart, okay, showing the price of one of the company. And you can actually decide whether do you want to buy, do you want to sell, or do you want to hold it? Okay, whether do you want, okay, let's keep it simple. Whether do you want to sell? All right. So what you need to do is you can actually type into the chat group if you want to buy, or if you want to sell it away after you have bought it, you can also put in sell. So very simple rule at the start, everybody have no share, you can only buy. Okay, so only after you have bought the share, then you can actually decide whether do you want to sell it away. So you can just put in B for buy, S to sell. So let's start. The market is going to open right now. So over here, we don't have really much things to see. So I'm going to give you one more. Okay, so now the share price is going up. So again, this is a company with solid fundamental. I repeat, this is a company with solid fundamental. This company is growing at a rate of 30 to 40% year on year. There's almost zero debt. Yeah, definitely they are making a lot of money. The free cash flow, everything is fantastic. And this is the share price. It is going up. So at this current point, how many of you would like to buy one? If you want to buy, can you just type into the chat group B? Okay, I received Michael, Delia, Sia, Cindy. Okay, so 4 of you, 5. Okay, so give your 5 more seconds. If you want to buy, just type in B. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. Wow, so many of you. Okay, so now you actually mentioned buy. Okay, so now market closed. All right, and what happened next is that, okay, there was actually some bad news that happened to this particular company, and the price plunges. Okay, almost 20%. The price plunges 20%. So at this point of time, okay, how many of you would like to buy and how many of you would like to sell? So market is open right now. You have 10 seconds to make your decision. So anybody would like to buy at this current point of time, and anybody would like to actually sell it off again? Okay, so Cindy is buying more, Casey is buying more, Edmund is buying, Jenny is buying, Albert is buying, Delia is buying. Wow, I see that you are buying more. Okay, buy. Okay, wow, so Sia sell away already. Okay, Michael is holding. So quite a number of you actually buying. And let's see what happened. Okay, unfortunately, the news continued to stay bad and the price continued to fall. So analyst is saying that this company is probably going to go all the way down because, you know, there is no uptrend in sight, and it just simply looks really, really, really bad. So for those of you who actually double up, you know, it's going to be painful heart attack. So the market starts now open. The market is open. And how many of you would like to buy? How many of you would like to buy right now? And how many of you would like to sell off your position? Cut loss. Take the loss. Take whatever is left. And if you are not doing anything, just put in H. H for hold. If you are waiting, just put in a H. All right. So the previous buyer, now you are probably sitting at a 50% loss. For those of you who jumped in previously for the last 2 times, you are now sitting at a 50% loss. All right. And of course, we have very, very strong and brave warrior like Edmund and Casey that is jumping in with more and more share, you know. And of course, Michael is holding. All right. Market is closed, and let's see what happened. All right. There is actually some good news, and the price went back up to the origin, to the first drop, the price where the first drop happened. So over here, market is open. What would you do? What will you do? All right, N is buying, Albert is buying, sell half. Okay, Casey is selling half, sell 50%. All right, I think if you sell 50%, you are probably still losing money. You're still losing some money. Sia is buying, Michael is buying, Delia is still holding. Okay, still waiting. All right, and the market is closed now. Okay, yes, as you can see, the market continue to move up higher. Okay, this is where, you know, people will say, if you didn't jump in previously, this is the best time for you to buy, because you can see that it's going higher and higher and higher and higher. And like I said, this is a solid company, good fundamental, good cash flow, high growth rate of 30%, no debt, no cash. I mean, all cash. So how many of you are buying? How many of you are buying? And how many of you want to sell away and cut loss at a higher price? Come on, just type it in. Ho, Edmund is holding. Albert is buying. Oh, Albert is buying a lot. Buying. Delia is still holding. Okay, Anne is holding as well. Okay, Michelle. Michelle, yes, Michelle is holding. Casey is buying. Michael is buying. Wow, good. A lot of you are buying. And let's see what happened next. Okay, yes, as you can see, I'm right. Okay, this is a good company. So a good company will always go higher and higher. So the price went all the way up, and right now it's at an all-new high. It's at an all-time high. As you can see, you know, the sky is the limit. Nothing is stopping it from going even higher. So what will you do? Will you buy more, or would you want to take profit already? Okay, Jenny is selling. LDS is also selling. Casey Tan is also selling. Albert is buying more. Annie sell half. Sia sell half. Edmund buy more. Delia buy more. Okay, I think there's a mix. Some of you are taking certain profit. Some of you are cutting loss because you bought it at the start, and right now you're making slight profit. Some of you who bought low, right now you are taking profit. And I do see people who are constantly buying. Okay, constantly buying. And let's see what happened next is that, oh man, another bad news happened. And now the price immediately fall 40%. Okay, the price for 40%. So right now, again, for those of you who didn't actually jump in previously, this actually is a good opportunity. The analysts say that, you know, the price should recover because, you know, historically has proven that this price will recover. So what will you do? Luckily sell. Jump building. All right. So for those of you who have been buying non-stop, yeah, right now you're sitting at a huge loss already. Okay, huge loss already. Cindy is buying, Delia is buying, Anne is buying, Edmund jump building, Michael is buying. Okay, so most of you guys are buying. And let's see, market is closed. Okay, yes, as what analysts say, the stock recovered very well. Okay, now it's back to the original high at the start. So at this point of time, okay, how many of you would like to buy? How many of you like to hold? How many of you would like to sell? Can you just type it in? Annie is buying. Albert is buying. Delia is selling. All right. Okay, keep the thing going. Take profit. Buy. Well, Edmund, I thought you jumped building already. Revive. Okay, so still buying, still buying. Okay, we can see that there's quite a few mix, right? Okay, and of course, coming to the last one, okay, the price continue to move even higher. Okay, the price continue to move even higher. So for those of you who bought it, congratulations, you are making probably a good profit at the last portion. So let me ask you guys for the last about 5 minutes. Okay, what are you doing? Okay, what are you all trying to do? Are you investing in the stock market? Or are you speculating? Or are you simply guessing? All right. So I do see some of you who are like constantly buying. Yeah, probably these are the investor. You know, they believe this is a good company. If the price drop, they buy more. If the price drop, they buy more. So they are constantly buying. Some of you who are buying and selling, you realize that probably end of the day, you are still losing money. Okay, and I think most of the time we are just probably guessing or speculating or educated guess, as what Michael has mentioned. So anyway, which company is this? What company is this? This is a real company, and this company is none other than Facebook. Okay, this company is none other than Facebook. So all I did is just extract from 2018 all the way to right now, the price. So we can see that for the last 2 years, okay, the price of Facebook has been pretty volatile. Okay, has been pretty volatile, going up and down, you know, in a huge swing. And but overall, if you look at the whole picture from 2013 all the way to 2020, you can see that overall it's going to give you less volatility if you are looking at it from a larger picture, you know. So yeah, this is exactly what you're going to do if you are just simply investing for the short period of time. You need to actually have additional tool to actually help you. But of course, if you're looking at the long-term horizon, it is important that, okay, a lot of people say that they are looking at the long-term horizon, but every time that when there's a huge movement in the stock market, you know, then their hand itchy, you know, they are, you know, although they say that I'm a long-term investor, but when the price drop, they will suddenly change their strategy and say that, oh, I'm a short-term investor. So anyway, okay, what is important and what you're going to learn over here is you need to understand what is your investment horizon. How long are you looking at? If you're a long-term investor, what do I mean by long-term? That means you're willing to hold for more than 5 years. Timing is definitely not so critical. But what is important is the company that you're investing in, make sure that it is a good company and make sure that it is a high growth company. So as the company continue to grow, you know, in the long run, prices should continue to go up even higher. So short-term fluctuation should not bother you. All right. So if you believe that Facebook 5 years down the road, 10 years down the road, they continue to grow, you know, at a good rate of 20-30% or even more, then you shouldn't even be affected by all this up and down in the short term. You can simply just buy and hold it and just leave it there. If the price drop, even better, buy more. And if you're a short-term investor, that means you want to see profit fast, then I would say that timing is definitely critical, you know, but in order for you to get the right timing, or rather increase your chance of getting the right timing, you will definitely need to add in technical analysis in your investment strategy, right? So I would say that really depends. So whether are you a long-term investor or short-term investor, I think only you will know the answer. All right. So that comes to the end of the questions that I actually prepared. So right now, I think we have time for about 10 to 15 minutes. Okay, so I will be able to take on additional questions. So if you have questions, you can actually type into the chat group so that I will be able to answer them. Okay, if there's no questions, then of course we will just end off early so that we can all enjoy our Saturday. Anyone have any questions? Okay, let's start with the first one from Sia. So Sia mentioned that will the telco companies benefit from 5G or they simply a pipe? So which company will benefit from 5G? So very important, I would say that it depends on which country are you looking at as well. Okay, which country are you looking at? But in the case of Singapore, okay, in the case of Singapore, we can see that the government has already allocated 4 companies, okay, for 5G. The first one is, of course, Singtel. The second one is StarHub and M1. They are going to combine forces. All right. And of course, the last one is awarded to TPG. All right. So, of course, for Singtel, for example, right now, they already secure a certain band. So, they are able to actually, so-called, how to say, they are able to come up with infrastructure, okay, for this particular wavelength. So what happened next is they need to set up all the setup station, the broadcast station and all that, right? So do they have the technology? Do they have all this expertise? Probably not. So that's why if you look at the newspaper, I think we also posted it into the Telegram, Singtel is looking for Nokia to help them to actually set up some of these station. And of course, for StarHub and M1, they are looking for Ericsson. Okay, Ericsson to actually help for all this equipment and things like that. And of course, for TPG, they're actually looking for Huawei. So I would say that all of these companies will benefit from it. Okay, all of these companies will benefit from it to a certain extent. All right, but of course, nobody will dominate and get the full amount of money lah. But as this continue, I would say that definitely all of them will be able to profit lah from this particular area. Okay, so that is for Sia. And of course, for LDS, if I invest 500 and earn $100 in profit, do I reinvest for next stock with initial $500 or with $600? Okay, very, very good point. So it really depends on your age as well. Okay, it really depends on your age as well. For example, if you're young, okay, if you're young, so you are just started investing. So what you want to do is you want to compound your money. So if you start with, let's say, $500, so you make $100, so now $600. So what you want to do is you want to use this $600 to continue to grow. So you should not take out your profit. You should actually constantly increase your capital. So all your profit should continue to stay in and generate even higher return for you. So that is how you get the compounded interest. Okay, and of course, that is how the loan shark make money, like compounding. But of course, if let's say you are somebody in the 50s, so you want to collect some passive income, you want some income to supplement your lifestyle. So for example, you have, let's say by then you have 500,000, you are collecting dividend. So the thing is, when you collect the dividend, do you want to spend your dividend or should you reinvest? So like I say, if you are already near to retirement, you will need the money for your retirement. Then of course you spend the money lah. Okay, no point growing your money until 1 million, but then leave it for your child or leave it for your grandchild. I mean, you can, but I would say that if you're starting, compound the money. So you can keep the profit, continue to roll. And if you want to, and if you're somewhere near the retirement age, then you can actually take out the profit and spend it. Yeah. Yes, for Casey, you're right. Singtel, M1, and StarHub. So Michelle, what do you think of MedTech? Will the trend increase further despite being overbought at PE ratio 250? All right, so very important, like I said, especially for this kind of PE that is extremely high, I usually will try to stay away lah. Yeah, because it's kind of overhyped lah. So And of course, for me, I don't really love pharmaceutical company because they can go up very, very fast. Same thing, they can also come down really, really fast. So that's personally for me, I kind of avoid this kind of, pharmaceutical industry, biotech company, whereby they create drugs, they create new vaccine and things like that. So I don't also chase the hype because once the hype is over, this thing will just drop significantly as well. It's not sustainable. If you ask me 5 years down the road, will MedTech continue to do well and grow at the current rate? I'm sure you have the answer. Probably the answer is no. Right. So anyone else? Anyone have any other burning question? All right. If there's no question, okay, maybe I need you all to help me as well. Can you all just type in one thing that you have learned from today's Q&A session? All right, sets, very interesting. Okay, let me leave sets for the next buy or buy series. So let me share sets on some of the upcoming buy or buy series. But in short, definitely they are being affected right now because of the airlines. They are very closely linked to airlines and of course the airport. So when nobody is flying, sets will be highly affected. So like I said, I avoid buying into Singapore Airlines because the future is really uncertain. So same thing, I would say the same so for sets. I would prefer to invest in a company that is going to do well in the future rather than a company that is uncertain, although they are cheap, but I don't, that's not the way I invest. Yeah, so can you just type in one thing that you have learned from today's Q&A session? Just to make sure that you all are listening so far. Okay, good. Screener. What about the rest? What about the rest? Oh, I just realized that I have 5% waiting outside. I didn't let them come in. Okay, yeah. So for those of you who just came in, I apologize. I just saw your request to join. So you can actually watch the replay on the Facebook. Okay, very good. So from Casey, be aware of emotions, at the game. So at the game, you learn about emotions. So yeah, investing is all about emotions. Albert, invest with fundamentally good companies. And iPhone, mention your time horizon. So very importantly, okay, when you actually jump in, you need to ask yourself, like, are you a long-term investor or do you just want to make money from investing? If you want to make money fast, right, that means you should have the mentality of a trader and not an investor. All right. So some people, they buy a company and then within one month they say, oh, I want to make money already. So what if the price go against you? Then they cannot take it. They cannot tahan. Hey, I thought I buy a good company. How come I still lose money? So after the price drop, they sell it away because they cannot take it. The price recover. So then they'll ask, how come every time I buy and the price drop, and after I sell, the price go up? Okay, so it's really because of, yeah, when you actually invest, what is the thing that you're looking at? And of course, for Delia, don't anyhow buy and sell. Have faith in your analysis of the business and hold it through. Yes, long-term investing, like I said, it seems easy, okay? Because like, for example, Facebook, you look at the long-term, very easy, buy and then just hold it as long as possible and you will make money. But during this period of time, you can see that $200 over can suddenly drop to 150. And if you look at, for example, Warren Buffett, his current holding, recently he lost $50 billion. So is it easy for you to actually withstand that kind of drop? It's definitely not easy. Your faith will be tested. You'll be like, oh, what if I'm wrong? What if the price continue to drop even more? So although now you look back, it's like, oh, just buy and leave it there. Don't even look at it. It's very easy. But yeah, like I said, if you're looking at long term, the fluctuation is also something that you need to bear in mind as well. And of course, for Michelle, pharmaceutical company stock will grow quickly but drop quickly also. Okay, fantastic. And let me see. Yep. Okay. Yep. Esmond actually say, what is your view on SG penny stock? Yeah, to me, penny stock is really like gambling lah. It's really like gambling. So certain penny stocks, you can actually use technical analysis to to actually invest in them. But again, personally, I don't. So far, if you actually use value investing for penny stock, I don't think you can do it, because most of the penny stocks, maybe out of 10, 9 of them are losing money. Fundamentally, all of them will fail, right? Yeah, so that's why they are penny stocks. The price are like simply very, very low, maybe 10 cents or yeah. I have bought a few penny stocks in the past before. Just simply I feel that, hey, like 10 cents, how low can it be? 20 cents, how low can it be? But it has proven to me 20 cent drop to 10 cent. In terms of loss, in terms of percentage, it's a 50% loss. So although the number looks small, but a small number drops even smaller, the percentage is quite big. Right, so this is something that you have to take note. Although 20 cent drop 10 cent, like nothing much, but if you put 5,000 in, 20 cent drop to 10 cent, you lose half. You lose $2,500. So of course, if it goes up, you make a lot. But if it drops, most of the time it drops, you can also lose a lot. So yeah, I think right now we are almost coming to one hour. So yeah, I really thank you guys for joining us for this Ask UI series, and I hope that this is something that is beneficial for you. So if you think this is good and you hope to have more UI session, can you just type in 777? Okay, honest feedback lah. If you think this is good, if you think that Bowen is very talking too much, you can just type in 555. Right, but I think should be fine. Those of them who don't like me, don't like my voice, they will not even watch the Zoom. Okay, cool. So glad that you guys actually love it and you guys are learning something. So of course, tomorrow we have something interesting. Tomorrow we're going to learn about Facebook. All right. And of course, I think with the recent drop, some people are asking, is Facebook the right time to buy? But of course, having said that, by the time I share with you guys, Facebook has recovered already. But having said that, looking at the future growth of Facebook, do you think Facebook is a company that will continue to grow? Okay, tomorrow we will discover more about this company called Facebook. So tomorrow is going to be 8 p.m. instead of 2 p.m. So just to take note is that tomorrow Facebook is going to be 8 p.m. to 9 p.m. So join us tomorrow. And of course, it will be on the Facebook UI Ultimate Investing Facebook group. So I hope to see you guys tomorrow. And that's all from me today. Have a good afternoon. And of course, invest safely and enjoy your weekend. So bye-bye. Yeah, have a good weekend. Bye, everyone.